So a lot of you guys are thinking now, okay, I get where I need to trade at. I get what the stock market is, but how do I actually go out and choose a stock from this whole realm of opportunities? So there's two different walks of trading or investing. There are people that trade on fundamentals. What I mean by fundamentals is something like Warren Buffett would do, where you analyze a company, its products, you talk to their management, you look at their balance sheets, their income sheets in terms of how much money they make. You forecast future revenues, and then you take all that information and you try to value the company. And you say, okay, this company is worth XYZ, and then you look for the ones that are undervalued according to your valuation. Now, this is an effective way to invest or trade, but it's not really feasible for 99.9% of people. And the reason is that the market has changed over the last 20 years. These days, the market cares only about growth. Growth, 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 but there are things that you can't quantify, which is, okay, you have a company that's groundbreaking. They may not make money for a long time, but what if they are just changing the world or changing the industry? So that growth, you can't put a value on it, and so then where does that go? If you look at the companies that have gone up the most in the last so many years, what you find is that a majority of them make little to no money, but they grow. So if you look at Tesla, for example, when I started looking at Tesla for the first time, every single person on the street, analysts, pundits, CNBC, they would all say one thing, that Tesla is an overvalued company, that it doesn't make any money. And that was when Tesla was at 50 bucks. And you know what starts to happen? It starts to go up. And it starts to go up. And people start pounding the door even louder, saying, hey, this is an overvalued company, it doesn't make any money. And guess what happens? The stock can keep going up. See, in trading, it's not about how much money a company makes or what their balance sheet is. It's about something totally different, and that's momentum. If you look at a list of the top 10 large cap companies that have gone up the most in the last 5 years, what you find is a majority of them make little to no money. So the whole fundamental analysis crowd, they may actually have to sit on their ideas for years and years and years. And frankly, that's just not for me. I'm trying to make money in the most efficient way possible, but also I want to be a part of big trends. So beyond the fundamentals, I believe us retail traders, I'm talking about people that are trading less than a couple $1 million. We need to be all about recognizing trends, momentum, and so we use what's called technical analysis to do it. You know, when everybody's talking about Tesla being overvalued at 50, it hit $1,000 this year. 1,000. Think about that. So a company that makes no money, that everybody hates, somehow can go from 50 to 100. I've traded so many companies this year that have done the same thing. One of my best trades was in a stock called Blink. BLNK. This is a battery company. It's got no history of making money, terrible fundamentals, but it fits a theme and a trend. That stock went from $2 to $40 this year within a handful of months. Our job as retail traders is not to figure out what's good and what's bad. We need to figure out ways to make money. So what we use is technical analysis to identify trends. We hop on them as long as those trends avail themselves, and then we get out. Whether a company is good or bad, makes money, they got great management, not management, it doesn't really matter. Yes, long term, those things probably matter, of course. If a company's going to be around for 10 years, it's got to have some prospects. But what if you're just trying to hold a stock for 2 weeks, 2 months even, or 6 months? Then those things don't matter. It's just the power of trends, news, and momentum that take over. And I have a system using technical analysis to identify when those trends start and how to ride them. So technical analysis is about taking data using something that we call charts. A chart is just a graphical format of all traders using candles and volume. And what we do with that chart is figure out what are the inflection points where we can buy and sell. See, the market is about buyers and sellers. It's just a giant auction. And those buyers and sellers, they leave an imprint based on their buys. And so what we do is we take that imprint and we put it on a chart, and then we start to identify patterns that we think could profit us. See, the thing with the market is because it's made out of humans and human behavior never changes, we can reasonably predict what can happen next. See, throughout history, humans are always governed by the same behavior. We see that herd mentality over and over. Fear, greed. We all have the same motivations. We want to take care of our family, our friends, our kids, leave something. So what happens is when we're faced with financial decisions, we tend to act the same way over and over. And those decisions, we look at the chart, and then we try to ascertain what's going to happen next using trading patterns. So what does that even all mean? So let's take an example of this chart here. We're looking at Tesla. What you can see here is that there are levels on this stock where the stock is actually held down. And what that means is that there's a level of supply in that stock, meaning sellers, that are holding the stock down. And once you actually get over that level, a stock can freely move. So let's take a look at Tesla. Look at how the stock is reacting around that 200 level. It's been a lid on that stock for over a year. It gets up to 200, then it pulls back. It gets up to 200, and then it pulls back. But what happens is when you break over that level, you start a stampede as the sellers have become exhausted and the buyers sense that the level has broke, and that's what's called a breakout. See, trading is about support and resistance, which are just levels of supply and demand. So when you have a lid on a particular stock, like how Tesla has it at $200, every time you test that level, you make that level weaker, and you're soaking up supply at those levels. And every single time you test it, you make it more powerful. And the longer that level is holding, the more powerful the breakout is. So as you can see, like when this thing breaks over 200, it's a straight shot. It starts to rip because now you've gotten through that lid. And that's what breakout trading is. It's just about breaking over a level of resistance that's been held down for a certain period of time. So that's one aspect of trading. But what we can do is use simple software to identify stocks that are showing us that same look, that same pattern. And that's how you trade. You find something that works, you duplicate it over and over and over, and you take those same trades. And that's how I built my whole career, is finding these opportunities like Tesla that have the ability to go up 100%, 200% in a matter of months.